Hey, good morning, everybody. It's Hammer. Today is Thursday, March 12th, 2026. I, of course, am the founder of Originator Success, Grab and Go Social, and Rate Sensei, 3 great products to help you to build your business in 2026. Be sure to check them out. Remember, you can join me live each and every weekday morning, 9:30 a.m. Eastern Time, as we talk about what's going on with rates and pricing. Not so great news this morning. Today, we're going to be talking about what's going on with the Strait of Hormuz and over in the Gulf, why oil prices are teetering back at $100 a barrel, likely to go past that today if they haven't already this morning, and where rates are going to go from here. We're going to talk all about that, and we'll have some fun doing it. Remember, if you would like to join me live each and every weekday morning and not miss any of the show, you can get a reminder text message. Sign up for that text at hmmr.io/reminder, or use this cool QR code over here. You could also sign up for our lock advice at www.ratelockadvice.com. Get an email to your inbox each and every weekday morning. Also sign up for our text alerts, www.ratetextalerts.com. They're $7 a month. You don't have to spend a lot of money to protect your pipeline. And there you go. So if you're here this morning, say good morning, all of my friends. Always appreciate you. If you're watching on the replay, give me hashtag replay in the comments. Let me know that you were here. If you're on Facebook, don't forget to smash that like button. If you're on YouTube, subscribe and all that good stuff. Also, remember, your comments, don't get lazy on me. Your comments drive the algorithm. It's what keeps me doing this every day. It's what helps me to get in front of more originators, which is something that helps the show grow. So make sure that you comment. Always appreciate to hear from you. Welcome to all the live folks. Kenny Rivard and Eric McDonald. Randy Tickle's asking questions already. What effect will the oil reserves being released have? If I forget to hit that, Randy, ask me again in a little while, but I think we'll spin back on that. Ron Siegel says, good morning, everybody. Today we celebrate National Baked Scallops Day. I think they had to dig hard to find that one. National Baked, not just like fried scallops, pan-seared scallops, baked scallops. I'm not a big scallops person, but I'll eat them once in a while. But I don't know about baked scallops. I think I'm more of a pan-seared scallops kind of guy. Good morning, Mike Brown, Rob Stewart. Eric McDonald, Lee Witt, great to have you here. Sean Segaloff, good morning, sir. Tammy Metzger, and Long Creek Lending. Angela Walters, good morning. Is my man Zane on yet? Where's Zane? I haven't seen Zane for a couple of days. I haven't been looking in the comments very well. So good morning, Allison Foy. Nima said, good morning, boss. Let's discuss AI, the 47-second mortgage, Credit Karma, Better Mortgage Company, and our MLO is going to be extinct. We could have that one on a whole nother conversation, but the answer is no, they won't. Kyle Mazikis, Nicole Semrad, Vicky Sweeney. There we go. Siegel gave me something better to work with this morning. It's National Popcorn Lovers Day. National Popcorn Lovers Day. So there you go. We can work with that. That's a hell of a lot easier than scallops. Question of the day. Do you prefer caramel popcorn, kettle corn, or cheesy corn? What kind of popcorn do y'all prefer? That is the question of the day in the comments. Make sure that you answer it. What kind of corn do you prefer? And Angela Walters, where are my friends? Where is Zane? Let them know I was looking for him. Where are they? I haven't seen him in a couple of days. Maybe I'm just not paying good attention, but I don't see him here this morning. So, all right, everybody, let's go ahead and jump into the other details. Let's see where we're at this morning. So, start off with where we're at today. Let me pull up Presentify because I restarted the computer. There you go. Okay, so as you can see, mortgage-backed securities currently down 11 basis points to start the day. 10-year Treasury yield 4.24. Now, remember, we were at 3.94 here. 3.94. That, if my math is correct, is 30 basis points between Friday the 27th right here and where we are at today. Also, yesterday, you can see it right here. Yesterday, the 10-year yield broke the 4.20 mark, which was a big line in the sand. Technicals taking a backseat, though, because of everything that's going on. So we'll do a quick recap of what happened yesterday, although I'm not going to pop it on the screen. Let me just go ahead and let's see. Bear with me a minute, and I'm going to Actually, I'll just get on there and say it. So, first things first, all of my Trump supporters, I love each and every one of you. However, I criticized Biden. I'll criticize Trump. When he comes and tweets, the war is won and it's almost complete, it's not, right? And that's what's in the markets right now. And we have to realize that. So don't go sending me angry emails that because I said something bad about the King cult leader there. I'm not a Trump hater, but I know what he does and why he does it and why he tweets things. And I know the guy moved markets on Monday and caused a huge recovery in mortgage-backed securities. However, now markets are like, okay, that faded away. And I warned you that was going to happen. And that's what we're seeing happen right now. So let me clear this out of the way. We'll go into a little more detail. Yesterday was the first day this week that we didn't see mortgage-backed securities recover. So let me make this a little bit bigger so we can kind of have some fun with it. All right. This was the 6th. So that was last Friday. Okay. On Friday, we had, remember the jobs data. We had a huge loss. We had jobs data came back down, and then we improved on the day. So Friday, big improvement. Monday, big loss to start the day, and then nice improvement. Another day of improvement. Tuesday, big loss to start the day. Nice improvement, and then things started to turn. Now, Monday, which was right here, this was when Trump said, hey, we're almost complete. We saw oil prices dive after he said that. Oil prices had hit $119 a barrel for Brent crude. They dropped back below. They were about $90 a barrel, right around that area, right? That was when he kind of said, oh, hey, we're it's not going to be weeks and we're almost done. And well, now markets are like, all right, we're realizing the reality and we're nowhere near done with this. And, again, not that the mainstream media is the end all do all, but any kind of headlines. Just look at what we're looking at for headlines here. And this is showing what traders and investors and markets are looking at. And it's why at the end of the day, the key here is that rates are not going to improve. Rates are worsening and they're not going to improve from here. So that's where I'm going. So I'll come back to the question of the day. I'm going to turn that off for now. Let me just throw the lock advice down at the bottom of the screen, and we'll leave that on here, right? So oil prices are back near $100 a barrel. At the moment, they're $99.30 for Brent crude, give or take, right? So when you see oil prices that go up, what happened to mortgage-backed securities? They go down and down and down and down. And that's what happens. If we look at rate sheets, rates have moved up. Now we're up to 6.24. Again, I was amazed after being at 599. Everything started on the 27th. And remember, this was the Monday. We woke up after a weekend of conflict with Iran, and I was amazed that we have not seen rates move much higher. And I've been in a lock stance for, most of the time, generally cautiously floating in the morning because we were having so many days with recovery. But then locking by the end of the day. And I can definitely support that. If I go back to, hold on, let me do this. If we go back to my rate texts, let me just double click this. So here you go. So bringing this up on the screen, it pretty clear, right? Be ready to lock at signs of trouble. Optimism will fade. And this is what I said. I said, if the optimism fades, so will the bond rally. Consider locking or floating according to risk tolerance if you saw reprice better today. And, we'd said cautiously float to start, see if we get any improvement. If not, lock. This is all the way back through till Monday that we were going through this stuff and talking about this, right? Again, cautiously float to start, be ready to lock, or by day's end if no improvement. And that was yesterday. And in Fed, we had to send out an alert because things got worse on the day. Here is your rate sheets and what that looks like. So, you don't have to look at me when I'm doing this. Yeah, let's see what Ron says here. Hold on a minute. Ron said, come on, Hammer. Trump embellishes. Main Street media lies. If you want news, you got to pay for services. You can vet yourself. Yes. And PDB. What is PDB, my friend? I'm not sure about PDB. So there we go. If we take a look here, again, most importantly, let's go back to Randy Teagle's question because it kind of puts us in. So just to summarize, because I'm jumping around a little bit. Number one, rate sheet's going to be worse today. We saw worsening yesterday in the markets. No recovery. It was the first day we didn't. I didn't even talk about the bond rollover, but net bond rollover, we were still way down on the day. The bond rollover doesn't affect your rate sheets, but everything else did. That's why we're seeing rates move higher, and they're probably going to move higher from here. The newest concerns, things that are driving things up higher right now, we've got concerns with the fact that this is going to cost a lot of money. There's all different kinds of numbers. I think the Trump administration said $11 billion over the last 6 days. But this is generally, it's going to push us past our budget constraints, which means more borrowing, which means more treasury issuance. That's starting to factor in with investors, especially with longer term bonds. Also, that this may not be over very quickly. And even if it were to stop the military action, if we don't get rid of this nut job regime that's in Iran, they're likely going to continue to punish global energy markets, and they have the ability to do so. So again, I don't want to get too deep into the commentary on this, but I will share my personal opinion. We've already stepped in it, and whether it was needed or not, we could be arguing back and forth. But at the end of the day, we're here now, and if you're going to get in a fight, you better finish the job. That's the one thing I will tell you, being a kid that grew up in the streets. If you're going to fight somebody, they need to be too afraid to fight you again, or else you always live with the fact that you may get sucker punched. So we need to push through this. And again, I know that might not be popular. Some people might say we need to end. If you do, this is what traders and markets are thinking about. And that's why I'm talking about it. If we leave things the way that they are, then they're expecting that we will see continued problems with oil supply and things like that. Now, yesterday we saw oil jump. Why did oil jump? Well, because tankers were attacked in the Strait of Hormuz and in the Gulf. Oil tankers burn as Iranian strikes defy Trump's claim to have won the war. And this is not an anti-Trump thing. It's just the reality. Trump says we won. He said that while he was at an event in Kentucky. Trump says we won. This is what he said. He said, you never like to say too early, you won, we won. In the first hour, it was over. Well, he said the United States have virtually destroyed Iran. We don't want to leave early, do we? We got to finish the job. And hopefully he follows through on that, because otherwise this is the result. And that means that this will be the results right here. And that's higher oil prices. So this morning, mortgage-backed securities down. Again, we have moved. Our high point was Friday the 27th. We were 100.50. Now we're down to 99.17. That's basically 133 basis points of loss in that time. And I got news for you. There's nothing that we can really argue about with the technicals to give us support. We've got the 10-year that broke above that 4.20 area that we talked about. There's really nothing to hang your hat that things are going to get better. And that's why down at the bottom, my advice has been to lock them. We've finally seen the dam break when it comes to rate sheet pricing. Rates have been pretty damn good through this whole thing. And I've mentioned that before, that I was surprised that we had seen rates so good. Now, I know many people would argue, well, there's a flight to safety, but there's not. This is every situation is judged on its own merits, if you will, its own situation. And where we're at right now, there's no reason to expect that this is going to improve anytime soon. Oil prices are likely to go up. Who knows? Next week, we could be at $120 a barrel, and you will see rate sheets continue to worsen when that happens. And that's the main takeaway here, is that rate sheets are going to get worse from here. There's no miraculous, we ended the whole thing, right? So you've got, let's go to the main, is this main Reuters here? So oil prices soar past $100 as tankers attacked in the Gulf and in the Strait of Hormuz. We've got U.S. intelligence says the Iran government is not at risk of collapse. And that's the thing. We can't leave this nut job regime in charge and not think that, they're not going to continue to explore nuclear options, and that they're not going to try to punish with the global stuff. Oil tankers burn as Iranian strikes defy Trump's claim to have won the war. FBI bulletin warned of possible Iran retaliation on California targets. I don't know about that one. But here you go. Here's the 11 billion according to sources, et cetera, et cetera. So we have all that stuff. Ron said, no one is discussing the real enemy in this war. Trump is playing chess. The media and Dems in Congress are playing checkers. Trump is defeating China right now with Venezuela and Iran. I don't disagree with that. That's the long game. However, we still have to worry about the short game. So I'm there. Lisa, what if I'm outside of 30 days on a closing? Depends. Where are you on the ability to lock on it? What's it cost you? Does it cost you an extra eighth in rate? So the question on that, and that's a great question, very relevant to what we want to be talking about, is let's say that right now, this, just using this as the status point, right? Let's say that we've seen rates go from 6 1/8 to 6 1/4. Where will they be in a month? Well, it depends. Where is oil prices going to be in a month? And will all of this have calmed down? How much risk tolerance does the consumer have? And how much past 30 days is it? Are we talking 45 days, a regular closing? I remember when a regular closing used to be 45 to 60 days when I wrote loans back when dinosaurs ruled the earth. But now you're looking at a lot of times you've got loans closing in 30 days, right? Everyone's always in a hurry. So if you've got something that's new construction or people that are out looking, you can't lock, but like if you've got something you can lock, but it's much farther out, there's less to worry about because we will see rates come down some. Now, the question is, let's take this 10-year treasury yield, for example, 4.24. There's argument about how much will this fall once we see things move, right? Because war cost sinks long-term government bonds, and long-term is the 30-year, but the 10-year isn't short-term on deficit worries. And that's the thing is, this is going to come with a price tag, and the longer it goes, the more it costs. And that makes it less likely that we'll see treasury yields drop again when this is over. They'll move a little bit lower, but we've moved up 30 basis points we talked about, right? And this was, by the way, this was like an anomaly. So using this as that low point, it's not necessarily a fair, where we were was right in that 4.0506, right? So let's say that we've done 20 basis points. Let's just say it's 20 basis points because I don't think it's fair to really use this as that low point. But the question is, how much will that fall again? Will we see another one like this where it drops below 4? Or do we kind of fall back into this range here, which is kind of normal? So to answer your question, outside of 30 days, depends on risk tolerance, depends on what you can lock it in for now and how much more expensive it would be to do that. If it's much, much farther out, then no, I'm not locking. If it's 40 days and it'll cost you a little bit in rebate pricing to lock it, I'd probably lock, because there's a good chance that if we see oil push up next week, you're going to see rates go up, and lenders are going to start to get fatigued on this. And you're going to see rates going up quicker and quicker. So that's generally what happens. And we all know that just like gas prices, mortgage rates, rate sheets worsen very quickly and they're slower to come back down. So we'll of course be there. Take away Iran as if it never happened. What would the technicals have done to rates? We would have improved. We had weaker labor market data. We had inflation that came in at expected, which was lower than what we've seen since 2021. Rate sheets would have had the opportunity to continue to improve if we hadn't had the Iran situation. We're talking about things that didn't happen, so we can't really argue about it, but it absolutely, look at the path that we were on before that happened. Friday the 27th, here we were right here. This was Friday the 27th. We probably would have kept seeing mortgage bond pricing improve. Not a lot, but a little bit at a time. Rates weren't in a position where they were going to move that much lower, but we would have seen them creep better, just a little bit at a time, improving. Similar to kind of this range here. That's what would have been expected. We would be going into next week's Fed meeting with talk that, no, there's not going to be a Fed rate cut in March, but April, if you remember a month ago, that April, this shows February 12th, but by the 20, see, like there's a window here that doesn't really get represented. It had actually come down quite a bit. Let me go to historical and let's turn off some of the noise. Hold on a minute. Let me get rid of the noise. Get rid of this, get rid of this, get rid of this. So, you look at expectation of where we were at on the 27th. I'm moving over to the 27th. So, on the 27th, that's the 23rd. Hold on, let me get back to the 27th. There was a 23% expectation that we'd see a rate cut by April. And there was a 75% expectation that we wouldn't. And then that jumped up and now it's up to, to 88%. So I thought it had been lower than that, but that was earlier in February that it had been down that low. So, but it probably would have moved lower again and we would have seen that. So that's kind of the current expectation on that. Sean said, new leader of Iran just announced the strait will remain closed. Do I think we see 150? No, I think we see 120. Also, I think that, again, this will continue to escalate the situation. We may have to put boots on the ground in order to get the current regime out. And I don't know if they'll do that. Who's winning in this oil environment? The U.S. Treasury will win. Our partnership with Venezuela will add to our revenue share. Okay. I mean, that's definitely, you're thinking on a totally different realm than a lot of us are, because the U.S. does have oil coming in at those prices. But I don't know. It's still, you look at where we're at. So, yeah, I see that. Look what happened when it was announced how much oil was being shipped. Are you talking about, and that was what Randy had asked. And I think the Wall Street Journal had that. So oil spikes as IEA, the International Energy Association, is it? Declares biggest ever supply disruption. So the International Energy Agency slashed its forecast for supply growth, blah, blah, blah. But even though putting that in, it did make a difference for a little bit that the reserves around the world were going to be released to bring oil prices down. But then we saw them move back up when we saw ships getting damaged here. Oil tankers burning, that pushed oil prices right back up. So, all right. I think I nailed all your questions. I think I saw my man Zane in there. Let me move through. Amy Blauser, is that just you or is my man Zane there too? Didn't see this morning. Live and late to the party. So I'm thinking it's just you. Oh, they were here yesterday, but it's Zane's baseball tournament today. Nice. Good luck to Zane on his baseball tournament. Will Mossad go in undercover to get newest leadership? I don't know. I'm not a general. I'm not in the administration. It gets into commentary if I start putting about what I think or what I hope or different things. Did I see Truflation CPI yesterday? Headline 108, core 1.06. I believe that. Prices are high, but they've stayed. I think we've seen inflation really kind of slow down. So I would agree with that. What do you think, Ron? You agree to that? What about everybody else? What do you guys think? Do you think inflation has cooled? I also think that even with the oil stuff, that will come back. It'll be like the tariffs. We'll see a couple months of higher inflation concerns, and then it'll come back down. All right, my friends, this certainly ran long today. I was thinking to myself that I wanted to do that again. Wish him good luck, please, for me, Ms. Amy. So I wanted to keep these shorter, and yet here I am. So anyway, if you guys are talking, I'm talking. We got 50 people on live. So if y'all have anything else to say, let me hear it in the comments. We'll wrap it up. Warsh pays attention to the private data. Yeah. But can he convince everyone else to? That's the question. Can he convince everyone else to? Notice how all of that just took a backseat to everything else. And then, of course, there's always people that are like, oh, we went to war with Iran for the Epstein files. Okay. Anyway, I'm getting a little too loopy now. Got to stop. Sean said, we're stuck with inflation. People can't afford to live. Well, New York wants to put minimum wage up to $30 an hour. That'll fix everything, won't it? It's already home of the most expensive Whopper. I think it's even more expensive than California. So corporations are the evil of America, my friends. They don't pay the workers enough. The money flows uphill. That's the reality. So, but if you were to pay people a lot more money, then you're also going to get hyperinflation. So there's no real easy answer, is there? It just takes, it would take time to fix things. But all right, y'all. Well, again, thank you for joining me. Appreciate all of you. Uh, Sean says it's the midterm. See, I'd argue it's not. The midterms, it's only March. The midterms, when are the midterms? November, right? When are midterm elections? They're Tuesday, November 3rd. So why would we go to war in March for November elections? You got April, May, June, July, August, September, October. Oh, 7 months. Yeah, I don't think it's for the midterm. Everyone talks about midterms now, but the midterms, you manipulating the midterms wouldn't happen until much closer to then, in my opinion. California creates minimum wage and people lost their jobs. Exactly. And because minimum wage is not what they should be focusing on. What they should be focusing on is corporate earnings and what wages are paid out. It's very un-American, but could you imagine if we passed laws that said corporate profits have to be reinvested back into the company, into labor, a certain percentage? Again, not that I mean, this is an off the cuff comment, but could you imagine that we did that? I just did my taxes last night with the accountant, and one of the things I focus on is what percentage of our revenue goes back to our employees. Even when we had, a year of falling revenue, we raised salaries. We paid more money in 2025 because I felt that was an important thing to do. I feel like that's the only way you would get things better, is pay people better. So anyway, my friends, so we can win the conflict prior to the midterms. Then if they're doing it now to think of it, then they were thinking it was going to be a long time. The war has to be completed before midterms. That's why it has to be done now. Okay, I got you. So you guys are coming in with that angle. Ron and Randy thought the same thing. Mike Tebow asked the order takers at McDonald's how the raise helped. Oh wait, it's a computer now. It's a giant screen. Mike said, I believe we did this based on intelligence. Iran was having a meeting of top officials. The nuclear discussions were not going in the right direction. Not only that, but they were all in a room and we knew where they were. That is an opportunity. Come on. Has anyone not watched Mobland on Paramount Plus? They should have taken out Richie right at the beginning, and look what would have happened. Look what they would have, all the headache they would have saved. If you don't know what I'm talking about, go watch Mobland. I like Tom Hardy stuff. I think Tom Hardy's a great actor. And, Pierce Brosnan and Mira, who is the woman, the older woman? I can't remember her damn name, but I thought it was a great show, especially being English. I thought it was fun. So, for anyone else seen that? Anyway, we've dropped a bunch of people. We're down to 34. It means Hammer needs to shut up. I got work to do. So do you. I'll catch you guys tomorrow. Take care, everybody. Bye-bye.